Hello, everybody. Welcome back to Beer and Money. My name is Ryan Burklo.
And I'm Alex Collins.
And on today's episode, we're going to be talking about, I think, a very popular / divisive subject, and that's going to be tariffs.
Yay, tariffs.
And I'm not sure everyone's saying yay, right? Like, the fact of the matter is like that we're not going to get political on this episode, but we are going to explain, what is a tariff. We're going to be talking about the good and the bad of the tariffs, how this affects businesses, and what could be some net results. And I guess we'll just be very clear up front, and we're going to throw up our hands and say we don't know, right? Like this, we don't know what's going to happen. It could be very, very bad. It could be very, very good, or somewhere in between. I have an opinion. It's probably going to be somewhere in between, but it's an opinion. I have no idea.
Well, and the other thing, Ryan, is that all knowable information is already priced into the market. So can we trade on this? Nope.
Yeah. Which is, that's not even on our topic or our agenda here, Alex, but I think like many people forget that, right? The tariffs have already been out there. Trump's already announced what's occurred, and that information has already been built in to the day for the market.
Well, and as soon as there's an announcement like, oh, well, we're not actually going to implement the tariff on Mexico for another week, like you see the market instantly
Within
react.
seconds. Exactly. So, this goes back to yours and my philosophy around like timing the market. Like it's pretty impossible to do so unless you have some magic ball or you're doing something illegal.
Mm-hmm.
I hate to say it that way, but that's just the case. So, anyways, besides, let's jump into it. We're already off the agenda, Alex. Let's dive into the agenda here. So, Alex, when we start with what's a tariff?
When have we ever followed an agenda, Ryan?
One day we will.
A tariff. A tariff is effectively it's a tax on anything that is imported. Could be all across the board on all goods. It could be specific. It could be targeted to a specific country. The countries that we're hearing right now are Canada, Mexico, and China, which are three of the biggest trading partners for the U.S. You also hear stuff about the EU, which is a trading bloc, slightly different than a country, but same general concept. So that's the basics of it is a tax on any good that is imported.
So let's talk about, what's the good of this, right? Like in theory, this is extra revenue that can be brought in to the U.S. because now we're charging more money to essentially accept those goods from that country.
Yeah, and this effectively raises the cost of whatever that good is. And so now there's the possibility of like, oh, well, maybe more production of that good will shift to being in the US. So it's potentially good for US employment.
And I think that's part of their philosophy is that will hopefully drive more American made goods, which in theory should be good for our economy, right? Maybe more employment because now the businesses are being developed, right? Like that's all the good. That's the philosophy / theory behind implementing a tariff like this.
Mm-hmm.
Now, there are some bad effects to this, right? So the bad effect could be, and again, what's the good? We just brought up some of the good. That those might end up being bad. We don't know. Right? But some of the bads in this example is, the cost of goods can go up. Like an example that's being thrown about right now on the internet is, well, if we're taxing China, who make our iPhones, that means the cost of that iPhone, in theory, is going to go up because, well, China's not going to take a cut on what they sell to Apple for. So essentially, they're just going to raise the price, which in turn, Apple's going to raise the price to offset that.
Now the question becomes, okay, like, is the price increased dollar for dollar, or does the offset like match there's a whole host of questions.
I made it overly simplistic, which I tend to do. And Alex, to Alex's point, we don't know, right? The fact of the matter is cost of goods will most likely go up.
Oh, the cost of goods will definitively go up. The only question is how much of that cost gets passed on to the consumer.
Correct. Which then this can spark trade wars, right, between countries, which, we should have started this off when we started talking about tariffs. Pre taxation before the tax code was implemented in the U.S. This is the tariffs were already implemented 1910, I think, Alex, is what we were talking about. Early 1900s, we'll just call it that, where the U.S. a majority or some of the revenue that came in the door was coming from tariffs. Now, this has sparked trade wars over time as they've implemented or taken away tariffs, which is a fear that a lot of people have right now. Is this going to spark another trade war?
I mean, heck, the Boston Tea Party was over
Yep,
tariffs on tea,
exactly.
um, because apparently Bostonians love their tea. Um, but yeah, no, the question becomes, is this going to spark a trade war? And do then our goods become more expensive to export, therefore lowering the sale of our exports? And like, okay, what's the net result of that? Who wins? And that the answer is it's messy and complicated, and like, if we get into a trade war, I believe most economists would tell you that the answer is nobody wins.
Yeah.
And so as a result, we don't want to spark a trade war. And so this then comes back to a question of like, okay, is this all just part of negotiation and the art of the deal and things of that nature? We've gotten a little bit of a response as far as how other countries are going to react. And for the most part, they've said, hey, if you're going to do this, we're going to do this, and or retaliate in kind. And now the question becomes, okay, are we net exporters or are we net importers?
Yep. So that's some of the good and some of the bad. Now, how are businesses going to be affected here, right? So, typically this is going to affect smaller business, at least at first, going to hit smaller businesses harder, right?
Well, in specific types of small businesses,
Yeah.
right? So, like, if we take a look at restaurants, one which gets all of their let's say a beef restaurant, and they're getting their stuff from the Midwest, as opposed to, say, a Mexican restaurant that's importing like avocados and tomatoes and tequila and stuff from Mexico. Like, okay, the Mexican restaurant is going to or the American restaurant that serves Mexican food is going to have all of their costs go up and could go up dramatically. Whereas the steakhouse that's getting their stuff from like Omaha or wherever else, not. And so it's going to make a change in like the relative value or the relative cost of a steakhouse versus, someplace that imports a bunch of their food.
Yeah. So this is going to affect really kind of smaller companies versus like a small cap company, right? Like small cap company is worth $1 billion, right?
Up to 2 billion. Yeah.
Right. And this is, the Mexican restaurant that Alex suggested most likely is not worth $1 billion, right?
It's also not likely publicly traded.
Exactly. So again, the small business owners most likely will get affected a lot harder than like a publicly traded company. Now that doesn't long term, who knows again, but at first that's probably where it's going to start.
Yeah, the small companies that do anything with importing or exporting, like they're the ones that are going to get caught up in this.
Although the
Much
tech companies that are importing stuff from China, right, and different things that can have an effect too.
for sure. And it'll be really interesting to see what winds up happening as a net result of all of this. I mean, it's one of the things about economics is it's incredibly hard to build models because there are too many variables. And so it's, like we're not even talking about like more than like two or three variables at this point. Um, and it's already getting complicated,
Yep.
largely because the variables wind up having to do with politics and people. And anytime you start adding people and emotion into, business, it becomes more complicated.
So what does this all lead to? What's the net result, right? So what can we expect kind of moving forward right now? And really, it's going to be most likely we're going to see, and we're already experiencing it, an uptick in volatility. So this is going to bring possibly a little bit of fear and concern in our investment portfolios and maybe just in the economy in general, as well as it might bring some possible opportunity at the same time. And so really the takeaway from today's conversation should be like, if we're talking about investments or just your balance sheet in general, you need to make sure that you recognize when you're investing for the long term, right? This isn't if you're investing for a 1 or 2 year period of time and you're in, a stock portfolio, you're already running a high risk. And now this risk might have just gotten a little bit higher because of that, right? And so when you're building out your financial plan, make sure you're aware of what your balance sheet looks like from that risk, and make sure that you have some cash sitting in the sidelines, some liquid assets, stuff that is not tied to the market, which allows you hopefully to not be as fearful, as well as possible opportunities that may come your way.
Yeah.
So we wanted to jump on this. We're already, I guess, a couple weeks late on this, maybe even a couple months late on this. But we had a couple emails, a couple conversations with people, and we wanted to make sure we get this message out. Look, we started this podcast to help you think differently about your money and just be aware of what's going on. And so we're hoping that this was valuable for you. A key ingredient here is making sure that you have your balance sheet set up. And so if you have questions on your balance sheet, if you're not a client of ours, definitely in our show notes, there's a scorecard. There's a link there. You can go do your own scorecard and get some information there, as well as a link to check out with us if you wanted to have a conversation with us and see if we could help you in any shape or form. Or if you just have questions in general that you think we should talk about on the podcast, head over to beerandmoney.net, and at the top of the page is a contact us. That's a great way to reach out to us for that. And if you are a client of ours and you have further questions of this, you know how to reach us that way too. So as always, Mr. Collins, we hope this episode is valuable for you.
Cheers.
This podcast is for informational purposes only and is not to be construed as tax, legal, or investment advice. Although the information has been gathered from sources believed to be reliable, please note that individual situations can vary. Therefore, the information should be relied upon only when coordinated with individual professional advice. Guest speakers and their firms are not affiliated with or endorsed by Park Avenue Securities, Guardian, or Quantified Financial Partners, and opinions stated are their own. Guardian, its subsidiaries, agents, and employees do not provide tax, legal, or accounting advice. Consult your tax, legal, or accounting professional regarding your individual situation. All investments and investment strategies contain risk and may lose value. This material is intended for general public use. By providing this content, Park Avenue Securities, LLC is not undertaking to provide investment advice or a recommendation for any specific individual or situation, or to otherwise act in a fiduciary capacity. Please contact a financial representative for guidance and information that is specific to your individual situation. Ryan and Alex are registered representatives and financial advisors of Park Avenue Securities, LLC. OSJ 200 Market Street, Suite 1850, Portland, Oregon 97201. Phone number 503-221-1226. Securities products and advisory services offered through Park Avenue Securities, member FINRA, SIPC. Financial representatives of the Guardian Life Insurance Company of America, Guardian, New York, New York. Park Avenue Securities is a wholly owned subsidiary of Guardian. Quantified Financial Partners is not an affiliate or subsidiary of Park Avenue Securities or Guardian. Ryan Burklo, CA Insurance License Number 0K24924. Alexander Collins, CA Insurance License Number 0H24806. 760011.1, expiration date February 2027.